following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 20th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call the present of being present. Well, firstly, I want to say thank you sincerely to everyone that was present last night at the workshop that I hosted at here at TFNN. And all those folks, all the many folks that are going to be watching the workshop, over the weekend or when time permits. That the archive should be available on your members page later on this evening. It was a great opportunity to be able to share incredible amounts of energy and really focus concentration in order to develop the Rhodes Momentum System. And as you know, focus concentration, it's a cornerstone. You know this. It's a cornerstone for achievement in business and any business that you're in and in all areas of our life. We've got to zero in on whatever it is we want to do. We've got to identify our target, and we cannot let anything stand in our way. We've got to keep our eye on the target until we release our arrow, pull the trigger. We must let nothing, I mean nothing, divert our attention and let no obstacle come before us without getting around it. And, of course, when it comes to obstacles, all we have to do is be like an ant. Doesn't matter whether you go over it or you go under it or you go around it. Always try a different path until you prevail. That's our ant philosophy. And then, of course, the key is concentration. Concentration is absolutely crucial. You've got to focus. You've got to filter out the noise and all the clutter that gets in our way. And that, folks, is how you get around negativity. Because negativity is the one obstacle that'll get in the way of accomplishing that which we want in life. So let me ask you this question. In a tennis match, whether you play tennis or not, it doesn't matter. In a tennis match, how long does it take for your opponent to return the ball? Yeah, not very long. And what happens if you lose your concentration? That's right. It's pretty simple. The game is over, and it's over before you even know it. If you lose your concentration during a presentation, you're making a presentation to someone, folks. Just think about it here at TFNN. You can tell when one of us as a contributor, when our attention seems to get diverted here. If you lose your attention during a presentation, you lose it all. Concentration takes a huge amount of discipline. But here's the thing. Discipline pays off, and it pays off big time. So, the present of being present. When you're at work, be at work. When you're in a meeting, be in a meeting. When you're with your kids, be with your kids. Focus, concentration, it will pay off. One of the greatest enemies of concentration, it's worry. Right? Think about it. Worry gets in the way of concentration, and most of our worries are what? Well, first of all, they're things that we can't control. So instead of worrying, just do the best job. Just do an extraordinary job. Do the best job at whatever it is that you're doing. That's all that you can control. And when it comes to trading and investing, it just means focus on your patterns, focus on your indicators, focus on your signal to go ahead and enter a trade, focus on your money management, and then, pull that trigger, shoot that arrow when your confirmation comes in. Let the trade do its thing. You can't control the trade, so don't worry about it. Don't try to control it. Instead, our focus really needs to shift to our next trade. Folks, concentrate on your next trade instead of worrying about the one that you're in. In the end, focused concentration will pay off. After all, it is the present of being present. Well, let's go be present with these markets right now. Dow futures, they're up 19 points. They're trading out at 16,134. S&P futures up 3.5 points. It's trading out at 18.05. NASDAQ futures up 10, trading at 35.02. Russell 2000 up 3.5 points out here. You've got not a ton. Well, King Dollar's up 11 cents. It's trading out at $80.90. Goldilocks up $3 right now, trading at 11.96. Silver's up 6 pennies. It's trading at 19.25. Light sweet crude flat this morning. It's trading out at 98.96. A quick peek around the world here. Let's go see what's going on over in Europa. The FTSE. FTSE 100 is up 15 points, about 0.25%. The DAX in Germany up 0.5%. That's up 47 points. A little bit of a mixed bag last night. Really, the Nikkei flat. It was up 11 points, but that is flat. The Hang Seng, that was down 76 points, 0.3%. The Shanghai, a different story. It was down 2% last night. It traded off 45 points. It closed out at 21.81. Our call-in number, 877-927-6648. If you give us a call, folks, would be happy to take your call, hear your voice, and answer whatever question I can. Let's start off by taking a look at the Euro-Japanese yen. It's one of my favorite currency pairs. It should be yours as well. Euro-Japanese yen here, you know, it got this little sideways consolidation box that it broke out of with conviction. It did that on December the 18th. Came back, tested it yesterday. Looks like it tested it a little bit here overnight. Nothing bearish about the pattern that we're taking a look at here inside of the Euro-Japanese yen. Of course, on the daily chart, because it made that 1 to 1.618 A to B equals CD up from a price projection, 140. And as far as where the next area is that this should trade to, you really got to go over to the longer-term chart. So let's go do that. Let's go take a look at the longer-term chart here for the Euro-Japanese yen. It's the weekly chart, and here it is. You can see up above all resistance out here. That resistance really being a little triple top that took place back in the 2009 time frame. That's the red. If you're watching this on TigerTV, you can see the red horizontal, the thick red horizontal line going across my screen. That really was the line of resistance that the Euro-Japanese yen needed to bust through. It busted through it. It says 144.33. That's its next stop. That's probably the next stop on a daily basis before it just kind of pauses out there. That'll give some energy to the markets, and then up to the 154-ish range out there. And that's what that currency pair wants to do. You know, take a look at currency pairs. Here's a pattern. I forgot to show you this pattern here yesterday. Apparently, I didn't have focus concentration. Now, here is a 3 drive to a top pattern. Now, this is a 30-minute chart. And this is on the U.S. dollar Japanese yen, not Japanese yen, not the yen. No, I'm sorry, not the euro yen. This is the U.S. dollar yen chart out here. Really an ideal 3 drive to a top pattern. The first drive out here taking place at about 7 p.m. Yep, 7 p.m. on December 8th out there, out at a price level about 103.20. Next drive, which is a 1.618 expansion of the swing points that I first just gave you all the way down. It traded down to a low here at about 1 o'clock in the afternoon on December the 11th. So the second drive takes place right around 12:30 in the evening on December the 13th, out at a price level of about 103.91. So you got a nice 1.618 expansion. Then makes a retracement, a 0.786 retracement, kind of normal, just like the futures market did on Wednesday as Uncle Ben came out, or as the minutes were released to the Uncle Ben meeting out there, actually came back to the 0.786 retracement like we took a look at yesterday and bounced right off of that. And boy, did it bounce. Then the third drive here on the U.S. dollar Japanese yen makes a 1.272 expansion. Boy, that is a beautiful thing. Gets all the way up here. This took place at about 6 o'clock in the evening. That was on December the 18th. What we can see here is this pattern is failing. It pulled back just a little bit, but this pattern should have pulled back much, much more. We're trading above the 104.38 level. Right now you're at 104.42, so the U.S. dollar, Japanese yen, this says it wants higher price. Let's go see what its daily chart looks like as well, daily, weekly. Let's see what pops up on my screen here. It looks like it's the weekly. Here's the U.S. dollar, Japanese yen. It is headed to, so it is now over resistance. It's clearing that resistance on a weekly basis, and that was the bearish engulfing candle that formed on May 24th. The high out there, 103.72. This wants higher price. How high? Well, 107.83 becomes its primary trading range boundary line. That is on the U.S. dollar, Japanese yen. Hey, let's go pick apart the queen. Not that we want to pick on the queen, but let's go pick apart the queen. The Queen Mum, the Euro U.S. dollar, because we really got to understand this in order to understand the king, right? You need to know what the queen is doing before the king can do anything. Here is, so we got a series of charts out here. Let's take, you're familiar with this chart. That is the weekly chart that we've been looking at, this weekly chart. Now, what I've got on this chart here, I went ahead and labeled everything, meaning when I say everything, the primary trading range boundary lines on my software here, I've built a tool that automatically goes out, identifies the largest number of co-located opens and closes. That's the body of the candle out there, and that's the thick line that goes across my screen. That's at 127. 127 is a significant support area. And then it figures out all the other primary trading range boundary lines. Now, I had to go ahead and put in here all of the diagonal lines. We've been watching that descending price channel. That's that big, thick red line to the downside. That area is held as a significant support area. That support area takes us back in a 2008 time frame. So we've been taking a look at the weekly chart here for a while. I went ahead and updated the daily chart here earlier this morning. If we take a look at the daily chart shows what it's been doing here as it went ahead and ran into the resistance area. That red line that you see coming across my screen in the upper portion, that is the same descending price channel that we looked at on the weekly chart. So as we went from the low here on November 7th up to a high that took place on December 11th, so far all that the euro has done has been about a 0.38 to retracement. Now that's normal, right? You get to a resistance area, you go ahead and you pull back, it pulls back. It gets close to that support level. Ideally, out here, we would see the euro-U.S. dollar pull back and test this little rising price channel out here. That rising price channel will take us into about the 134.91 area. Look, if this is pulling back here, that says the U.S. dollar index is getting stronger. If the U.S. dollar index is getting stronger, right now the correlation dance, the tango between gold and the U.S. dollar, that is in full force. So we want to be paying attention to what happens with regard to the euro-U.S. dollar. We know that resistance is just slightly overhead out here. This suggests a further pullback in the currency pair at this stage. Right now, it just really kind of stopped here. There's no bullishness to this candle. That actually is not a hammer candle for those of you that thought that it might have been out here. Too much of a wick at the top of that. So we'll look for 134.91 as a pullback in the euro-U.S. dollar currency pair. Goldilocks up $3 right now. We get back, we'll go take a look at gold, silver, and anything else you'd like. It's 877-927-6648. We'll be right here, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 21, S&P up 3 right now. Let's go check in on Goldilocks and silver out here. Right now, gold is trading up $3 out at $11.96. Now, if we take a look at yesterday's action out here, down with 160,000 contracts. Now, there's really two A to B equals CD patterns that have set up. The larger one is the one that came off as gold got into the resistance line of its descending price channel. That took place on August 28th out there. That was the high of 1434. That was your A point of the larger A to B equals CD down. Your B point being October 15th, that low at 1251. Your C point out here, a little doji as it ran into the resistance area of that descending price channel again. October 28th high, 1361.80. 1-to-1 A to B equals CD equals 1179.30 out there. That it 1179.30 takes you where? It takes you all the way back to the June 28th low. You're trading with inside that swing point. The low has not been tested, so that's one price objective. That's only a 1-to-1 A to B equals CD. That doesn't mean that's where price stops. That's just your initial price objective. Now, we have a second A to B equals CD. This one has been confirmed. And this one here is coming off of the high from October 28th, that same little doji candle, all the way down to the low that was put in on December 6th out here, and that's at 1210. Makes about a 0.382 retracement. Let's go measure it here. Let's take a look at the retracement level. Yeah, 0.382, really dead on 0.382 retracement. 1268.50 was the number. Got up to 1267.50. How do you like that? Got to love that within $1. Now, that's a dangerous thing out there to only make a 0.382 retracement, then confirm the A to B equals CD down by passing the B point, which had volume of 154,000 contracts. You passed it yesterday with volume, 160,000 contracts. So, yes, you're coming into the swing point back here on June 28th with a lighter volume, and you've got the larger A to B equals CD, which did not confirm with volume, but this smaller one did. So that gives us a couple different target areas here to watch gold. Number one could be that swing point from June 28th low. That's the last time that the bulls showed up. Bullish engulfing candle, that remains a level of support untested. But if that level holds, okay, that's one. So there are some, if you take a look at where the bulls and the bears are hanging out, We'll see if they're still hanging out. The bulls are hanging out as they were on June 28th there. If they're not, and it pierces that and it closes below that or it spikes below it, whatever it does, the target is really 11.15. That's your 1 to 1A to B equals CD. 11.2950 is your 1 to 1.272 of the larger pattern out there. So the price range, if the June 28th level fails, really is the 11.29 to 11.15-ish area, and the 11.15-ish doesn't have to stop. It could be the free fall all the way down to 10.74 because of only doing that 0.382 retracement on the shorter A to B equals CD down. That's really what it sets up as an opportunity. Now, it sets that up as an opportunity until we see June 28th. That's the first area. That's the first battle line. We'll pay attention to what happens with gold. Now, that doesn't mean it's going to have to get down there, but that's what it looks like it wants to do as we speak right now. With regard to silver, as we take a look at high-ho silver out here, silver right now, that's trading out at 19.26. It's up 7 pennies here. Silver stronger than gold. It has not taken out the December 4th swing point out here. It's trading into the December 4th swing point. That has 38,000 contracts. That is where bulls are also hanging out. That's a nice little morning star, bullish engulfing candle out there. That says the low of that session, 1889. That is a level of support. Again, 38,000 contracts. Yesterday on the way down into it, 42. So that's always a bad scene. You stop before the swing point. You travel into it with some volume out here. Silver has that larger A to B equals CD. That would complete at about $18.50, 18.46 the low. The low, that key reversal session, bullish engulfing, Morningstar, whole kit and caboodle. That was from June 28th. That low is 18.18. So that's where the battle is taking place. I do like the look of high-ho silver here, plus the bounce in silver. That doesn't have resistance until it would get up into the descending price channel out here, and that's quite a ways up. That's probably in the $23-ish range out there. So that's what's going on inside of those metals. We should start taking, since the week is almost over, and it's been a heck of a week, hasn't it? It has been a heck of a week when you take a look at the way these markets have moved here. Let's take a look at the Dow futures right now. So the Dow futures are trading up over resistance. Well, resistance in the Dow future, you had a bearish engulfing candle. This is the week here. Let me see, what is that? It's a week of December 6th out there. So that says the high of the prior week. That was a November 29th level. That high is 16,162. You know, you have not closed above it. That's really a level of resistance. That doesn't mean you short it. It's just an area of resistance where there's a little bit of a battle that is taking place. But that's on the Dow futures out here. Daily, this morning I should say, gave us the type of signal, another bullish confirmation signal that we wanted to see if you're bullish. And right now, it's not a matter of whether I'm bullish. The charts are bullish. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 51 points. It's trading out at 16,230. S&P's up about 5. It's trading out at 1814. Composite up 12 points. Trading out at 4,069. Russell 2000 up 3.5 points. Trading out at 1128. Apple on the move this morning. It's up instead of down. It's up $1.26. Microsoft is flat. Google's up $6 and change. Leading the charge to the upside. It's the jazzy one. Used to have a license plate. That was the jazzy one when I lived in that good old Motown, Detroit. Jazz Pharmaceuticals, that's leader in the clubhouse, up 8%, up $9 and change. Google just behind. They're up $6, about 0.5%. Red Hat, RHT. Take a look at that. That's up about 13% this morning, up $6. Dealer Track Tech, TRAK. That's up 13%. MasterCard, that is up about $3. Oramed Pharmaceuticals, oh my goodness, that's up 66%. They had to cure something. ORMP is up 66%. It's up by $5 out here. Bib Biogen, that's up about $3 right now. Tesla's up 2.5. Pioneer Natural Resources, PXD, was looking at that. I think we've got that in one of my tabs out there. We'll take a look at that. It was waiting for it to pull back further. We'll still go check in on it. CarMax to the downside. It's off 7%. KMX is its ticker symbol. Don't know if they were out with numbers. Let's see here. Were they out with numbers? Let's see here. Looks like they were. I just don't see them. In any event, the market is not responding well to that. Down $3 right now. Grainger WW off about 4. Tibco Software down 3, Fastenal off 3, Interdigital Corp down about 250, Swift transition or something like that off of $1.61. Our call number, 877-927-6664. Let's go back and just check out the indexes here. So I've got the Dow, switched over from the futures. Let's go take a look at the actual cash indexes out here. The bearish engulfing candle also exists here. We're looking at now, if you're watching us on Tiger TV, I hope you are. I've been able to, preparing for the workshop last night, I've been working on trying to create the charting system that shows the Rhodes momentum strategy, the system, the indicator, the whole kit and caboodle, and be able to look at 2 time frames at the same time. So the upper chart that we're looking at here is the weekly time frame. You know, the trend is your friend when you're trading. If you're trading a swing trader, a day trader, daily charts, I should say, you better know what's going on in the trend above you. It's good to know what's going below you, but you really want to know what the primary trend is I like to refer to it. So on these charts here, the primary trend is most certainly the weekly chart. Big old bull sash candle this week. It doesn't get too much larger than this, as strong as you can get. So a little bearish engulfing candle. So that means resistance, a slight amount of resistance is the week of November 29th, that high. 16,174.51. You're at 16,232.37. Folks, if you're short, and I'm just telling you from a trend standpoint, if you're short and you get a close above 16,174.51 coming into the close, you really got to ask yourself why. Because what is it that you're looking at? I will tell you that the stock charts are not suggesting that you be short, at least the Dow. I'm referring to the Dow now. That's what we're looking at in the Dow, because it'll have cleared all resistance on the daily charts, on the weekly charts, and the momentum never shifted on the weekly chart here. Hasn't shifted for quite some time. So that's on the Dow. Let's go take a look at all of the indexes. Let's go take a look at the NDX 100. We'll take them one by one out here. So the weekly chart's going to be up on the upper portion of the screen. There we go. A weekly portion here shows that last week was the bearish engulfing candle out there. That says resistance inside the NDX 100 is 35.2401. You're at 35.11 right now. Hey, the NDX closes above 35.2401. The same question has to be posed if you were short. Why would you be short that index? There would be no resistance overhead. That's the only resistance you have out here. I do suspect that is going to be able to be taken out here on Wednesday's action. You got a nice little buy confirmation inside of the Qs out there. You got Apple's up $3. We'll take a look at Apple in a bit here. Let's go take a look. We got the NDX. Let's go take a look. How about the New York Stock Exchange? Let's go take a look at the NYSE. All of the oscillators are above the zero line. Summation index has ticked up, so you got bullish signs there inside of the New York Stock Exchange. Actually, if you could trade the New York Stock Exchange right now, didn't mean to do that here. Nice big bull sash candle is formed this week. If you could trade the New York Stock Exchange, you'd say a close above last week's high, which is 10,159.85. Well, you're already above it. You're at 10,178 right now. That is a buy signal. Small little bearish engulfing candle. Doesn't even really count out here. I just wouldn't be paying much attention to that. The New York Stock Exchange on the weekly chart, that hasn't been in any kind of bearish mode here for quite some time, and you got a nice little confirmation of a buy point that took place on Wednesday's action. So that is bullish out here. So again, it's really important for you to understand. Number one, I always have a pretty enthusiastic voice and energy anyways. And when I'm talking about all this, it's not me that is bullish. That's why I want you to really get your ears wrapped around. It is not me. It is the stock chart. I'm just here to show you what the stock chart is saying. What the stock being present. You know, today when we kick the show off, the present of being present. And the present of being present means when you're present, you are present. You're not looking into the future, all right? You know, you can come up with all kinds of things that might be wrong or this or that or what's going on. But the present, the only present that I know when you take a look at a stock chart is what is the current pattern. Now, the future is when you're in a trade, long or short or what have you. Yeah, you're doing price projections. Use the A to B equals CD patterns and retracements and things of that sort. But when it comes back to taking a look at the stock chart and seeing where things are at right now, all you have is the information that's available to you. So that's all that I'm really reporting to you. I am willing to change in a moment's notice. All that has to change is some type of signal on the stock chart out here. So from now on, we'll be looking at when I pull up this version, the Rhodes Momentum System. And if you didn't get a chance to attend the workshop out here, last night. You know what? You can still sign up for my newsletter service. It's got a 30-day unconditional money-back guarantee, and I'll teach you how to be able to utilize this system and all the great information that's inside there. So if you missed out on it last night, don't get coal in your stocking. Go sign up for the newsletter. You got 30-day unconditional money-back guarantee. So New York Stock Exchange on the weekly, and now in the monthly, we know it's trading inside the swing point, so it wants to go test the highs out there. So again, this is just me reporting on what the stock charts are telling us, certainly utilizing my system out here, and it's system pretty darn good, folks. Now, here is the Russell 2000. Russell 2000 is, quite frankly, the index itself is up above its resistance area. The only resistance, really, in the Russell would have been this bearish engulfing candle that took you back into November 1st, 2013. Now, the actual futures contract, it's got an island reversal again, and even when I reported on that island reversal out there, I reported how suspect it actually is because it occurred between November 29th. Between the weekend when we opened back up on Monday. It was a light trading day on the 29th, so, I kind of said, hey, take it with a grain of salt. Well, resistance here inside the Russell is the high of the November 1st candle. That is at 1123. You're traveling at 1129.50. So this is not an index. Also, on the weekly, I'm taking a look at the weekly trend out here. It's bullish as can be, and a close above 1123.30. Don't be short the Russell 2000 via TZA. The market is going to move higher into December 30th, 31st, January 1st, 2nd, or what have you. Remember, a bunch of money comes into the market in the early part of January, just simply because of all the retirement funds, the funding for those retirement funds and so forth. The daily chart gave you a nice little buy signal. It did that on Uncle Ben Day, December 18th, yesterday. Yes, it was the 19th. Yeah, so on the 18th out there. So that's Russell 2000 on both time frames, weekly and daily. If we take a look here at the let's go take a look at the S&P 500. Can't leave out the S&P 500. And as we look at this on a weekly chart, come on, it says a lot of calculations going on. So the bearish engulfing candle, that did exist, and it's, like I say, one you had to take with a grain of salt. That's because such a small body engulfing a doji candle out there. Really, resistance out here was the high of that doji. That's 1813.55. You're at 1817 right now. Week hasn't closed, but you know what? This blue area that you see here, that's a super strong bullish mode. You can see right now the candle, that way that it has formed, it's in super strong bullish mode out there. So please don't be short. This is the market, the charts are communicating that this is a strong bullish run out here. There is no reversal. There is no resistance on any of the indexes that we have taken a look at here thus far. Let's see, what have we missed out? So we got the S&P 500. Well, the composite, I suppose, right? We didn't look at the composite. Let's go take a look at the composite if I can get my arrow. That has shown a little bit of weakness. So let's go take a look at the composite. While the charts here are calculating, the Dow is up 67 points right now, and the S&P is up 7. So inside the composite here, it formed a 3-week reversal pattern. That's the evening star. Evening star says that resistance likely is the high of this candle from last week, and that is out at 4,081.78. You're at 40.7708. Hey, today it closed above 40.8178. No resistance inside of the composite. It gave also a nice little buy signal on Wednesday's close out there. So if I missed anything, the SOX. Let's go take a look at the SOX index out here. We'll take a look at weekly. We'll take a look at the daily charts. And again, we're showing everything is up and above resistance level. Same thing here in the SOX. The SOX had formed a little bearish engulfing candle. And you remember, all these signals out here, you got to get confirmation. Well, the confirmation is a follow through and a move to the downside in this case here, from last week's bearish engulfing candle high, which is 518.97. You're at 520.22 right now. There is no resistance other than some type of big, huge reversal here intraday. All things are bullish. All things. Well, with the exception of Goldilocks and silver, and maybe some other stock charts out there. But with regard to the indexes, that's where things are at right now. And there should not be in a bearish mode. If you've ever been on the wrong side of the trade, what I can tell you is these stock charts would say if you're short, you're on the wrong side of the trade. That's what the stock charts. It's not Steve. It is the stock charts that are communicating that to us. Let's go take a look at the monthly charts here. I don't have to go change over the other system. But let's take a look at the monthly charts and see what they are indicating to us. Now, I'm going to go to the Dow because the Dow, probably had the biggest bearish pattern out here. And here's the thing. And when I say biggest bearish, potential. The key is potential. It had the potential pattern. Here's looking into the future, if you will, and this here has a price relative strength divergent pattern, or had it. Now, that is going to be threatened to be taken out here this week, and if that gets taken out here, and I'm looking at it, I'm going back to the month of July 2013, the relative strength indicator got up to 73.86. Right now, as we are trading here, we're at 73.49. If it closes out the month above 73.86, the divergence patterns that existed at the highs back in 2000, that existed at the highs back in 2007, and if I took my Dow chart back into 1928 and 29, back into 1987 when we had the crash, and take it back into other periods of time where we saw the markets move down, what we would see is this divergent pattern out here. And, of course, the divergent pattern has to be confirmed with a reversal candle. Well, there ain't no reversal candle here just yet. Obviously, it is only the 20th, but Santa has arrived. He even had a beard out there. He didn't have a big fat belly. I don't think Ben's got a big fat belly out there, but he did arrive, and the Santa Claus rally, it is in full force out here. So you can expect these markets to move higher through the end of, at least through the end of the year out here. And that says that inside the Dow, its potential reversal pattern, I will just simply have to take the divergence sign if you're watching this on Tiger TV, and I'll have to get rid of the question mark. But we'll see. We'll take a look at that December 31st. Now, the reason why I say that is because the S&P 500 does not have that same divergence out here. If we take a look at the monthly chart, inside of the S&P 500, the first sign where that would have formed was that July of 2013 level. That RSI, the 14 period, got up to 74.43. Right now, what you are trading at is at 76.45. There is no divergence out there with regard to relative strength. This is actually just communicating to us, yes, it's overbought on a monthly chart, but overbought conditions in a bull market, they stay overbought for some period of time. But there is no divergence, the type of divergence that we saw in 2000, the type of divergence that we saw in 2007 out here, and that does not exist inside of the S&P 500 on a monthly chart. That says that the S&P 500, yeah, it's going to run its head into the top of this little rising price channel, but I suppose that's right around the 1875-ish type mark or so. That doesn't mean the markets don't go back and forth, but there are no bears. There are no bears out here that I can see on any charts. If somebody sees a bear out here, a bearish reversal candle or something that I'm overlooking, give me a call, because I just don't see it. Russell 2000, and that says that... I don't know. It just says there are no bears at the moment. Dow is up 68 points. S&P is up 7. Composite is up 19 points right now. Red Hat. So when we get back from this break, let's go take a look at Red Hat. That's the leader in the clubhouse, up 16%. RHT is its ticker symbol. CarMax is down 7%. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is up 65. S&P is up 7.5, trading out at 1817. I said let's go peek in on Red Hat. RHT is the ticker symbol. They did come out with numbers. Their net income, $52 million versus, where is it, 34 or something like that, 34.7. Revenues, they generated revenues of $396 million versus $343. And boy, you want to talk about some movement here. Now, Red Hat had been in a little bit of a descending price channel. That has been taken out with today's action. That little descending price channel coming back to the high out here. It's a weekly chart we're looking at first here. This is April 20th, 2012. The tie out there, $62.75. The low of that swing point is at $59.20 or at $57. Volume out there was 10 million shares. So far through yesterday, did about 9.9 million shares. So it's coming into that swing point with volume. It has broken its descending price channel. It did form an A to B equals CD down pattern. At A to B, that A point is April 20th high. Your B point is the low here on December 7th. That's at 46.34. The C point was up here at about February 1st. The exact 1-to-1 would have been 40.69. Never made it down all that way. It got down to a low here on October 18th at 41.89. So on the monthly chart, this has truly broken its trend that it was in. That was a little short-term price trend out here. Let's see if it's gotten back inside the larger trend out here. That would be coming off of the level back in 2008, right around $8.30 out here. So let's just draw that line. Yeah, it is back inside that larger trend out here today. Let's take a look at the daily chart. Now, the daily chart's going to show you an island reversal extraordinaire. Take a look at this thing. And not that it hasn't had some problems here, and it's had a big downdraft session. Don't know what was behind that on September 24th. That's one thing that would have had you scared to get inside of this equity here. But, of course, that is also why I developed the Rhodes Momentum systems and indicators out here, because some of the old tools don't always work out there. And this actually on a daily chart showed that the momentum was changing out there. So somebody knew something. But back to the island reversal. This thing gapped down with some big volume back on September 24th. You can see it just kind of consolidated. Went lower. Most certainly went lower into the lows back in October. And then yesterday got inside the gap. Today above that. This area here truly does become a island. With the breaking a trend, I'm going to have to assume that that's going to be an island of significance. So you don't have to worry about that necessarily. That big downdraft out here. Volume-wise, today so far inside Red Hat, 3.5 million shares. We've only been trading for 27 minutes out here, and the downdraft here had 13 million shares. So if this volume pace keeps up, that'll exceed the downdraft out there. And that is on Red Hat. It's going back to its highs out there, as we took a look at on the weekly chart, and that's right around the high 62.75. To the downside, what was to the downside? The big thing to the downside was, give me a moment here, I lost it. I think it was CarMax. No. Yeah, CarMax. Let's go check out CarMax anyways. KMX is the ticker symbol. So let's go see what CarMax is doing. Down with some volume here this morning. Let's go try to figure out where this is going to. Now, volume so far out of this equity, that would be considered volume off of the highs, 1.5 million shares. Yesterday made a high. Looks like it was probably an all-time high with 1.6 million shares. Now, where this thing is headed to, and we'll see if it has some support, made a high volume low out here. That has been tested. That is June 21st, the top of which is $48.10, 8.5 million shares out there. So, folks, be long and be strong. All the indexes, everything is pointed north. Santa has arrived. There is no coal in the stock market. It's just lots of goodies to open up. Have a great weekend, folks. I look forward to seeing you come Monday morning. Take care now. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.